My name is Will Barton, and I am the lead analyst at High Dividend Opportunities, the #1 income investing group on Seeking Alpha. Thank you for watching our Income Method Picks series, where we take a look at investments we have recommended to our community of income investors. Today's pick is the Virtu's InfraCap U.S. Preferred Stock ETF, ticker PFFA. PFFA is an actively managed ETF focused on publicly traded preferred shares, with a monthly dividend yield of over 9%. Preferred stocks are hybrid securities with characteristics of both equity and debt. They are generally senior to common stock in the capital structure and can offer attractive income, payment priority, tax-favored income, and diversification benefits. That is the broad case for preferreds. The specific case for PFFA is active management. Unlike passive funds that simply track an index, PFFA's management team can rotate into preferred securities that appear mispriced, overlooked, or trading at attractive discounts. That means preferred shares can trade below par depending on interest rates, market conditions, and sentiment around the issuer. PFFA's portfolio changes based on opportunity. Current top holdings include preferreds and fixed income securities tied to names like Oracle, Flagstar Bank, Energy Transfer, KKR, Apollo Global Management, and others. The fund currently shows a 30-day SEC yield and distribution rate above 9%, strengthening appeal for investors seeking high monthly income. PFFA also uses leverage, currently around 23%. That can amplify income and total returns. It can be a headwind when rates rise, but it becomes more favorable when rates decline. Over time, PFFA has delivered strong relative performance against preferred stock benchmarks, including notable outperformance over 3-year, 5-year, and since inception periods. The key differentiators are active management and leverage. The income comparison shows the impact clearly. PFFA has generated significantly more portfolio income than a passive preferred stock alternative over the period shown. PFFA has also delivered stronger portfolio growth than the passive preferred stock benchmark shown here, despite going through very different interest rate environments. The takeaway is simple. Preferred securities are offering higher yields today and still trade at meaningful discounts in many cases. If interest rates stabilize or decline, that can create a favorable backdrop for preferred stock prices. For investors looking for high monthly income, active preferred stock management, and diversified exposure in one ETF, PFFA is worth consideration. For more details on this ticker and other ideas like it, consider subscribing to High Dividend Opportunities, the #1 investing group on Seeking Alpha.